Hi there, welcome to the new financial year. Hope you did not wait up to midnight to see all the fireworks that should have went off because this is a more exciting time of the year than the New Year's Day celebrations we have. That's just my own opinion, and more than likely no one else shares that opinion with me. However, with the new financial year, I have decided to start tracking two of my portfolios to the market. Those two portfolios my long-term buy and hold strategy, or using that strategy, and the other portfolio is using the short-term sentiment and momentum strategy. I just wanted to see if one strategy could beat the other over the longer term, say 3 to 5 years. The other day I had a bit of a light bulb moment in the shower, and I thought maybe tracking the collective ideas of a group of investors, maybe that could actually outperform not only the market, but also my own personal portfolios. And I do think it will be able to. So I decided to ask you, the viewer, to give me your 3 best long-term ASX companies that you think will outperform the market over the next 3 and 5 years. I collected all that information and then I created this hypothetical group portfolio of your best 27 companies. Originally, it was going to be 25, but I'll talk about why I've extended that to 27. In this video, I am going to reveal those 27 companies to you, and I'm recording this video 1 hour and 30 minutes after the markets have opened on the new financial year, and I'll show you the performance of this portfolio 1 hour and 30 minutes into the new financial year. You might be already surprised about how this group portfolio is performing. Before then, just a few particular facts about this group portfolio. The 27 stocks I did choose in the end to be put into the group portfolio came from over 80 lists that were provided to me over the last 2 days. In those 80 lists, there were 126 companies nominated. 48 of those companies were chosen at least twice by investors. So I had to whittle that 48 companies down to 27, and at least a company had to get at least 5 points. And the way I calculated points was if someone chose that company as their best idea, they would get 3 points. The second best idea would get 2 points, and their third best idea would get 1 point. So a company had to get at least 5 points to be chosen into this hypothetical group portfolio. There were quite a few companies that almost made it into the hypothetical group portfolio. They just fell a smidgen short. If one more person voted for any of these companies, they more than likely would have made it. This is not a bad thing because the first company that just fell short was AVA Risk Group, and this is one of my highest conviction companies. It is a profitable company. Not only is it profitable, it is growing at a really good rate over the last 2 years, and even though it is growing quite strongly, it only has a market cap of less than 100 million. In the past about 3 or 4 months, the share price has been falling back, which is leading to some good opportunities to buy this growing, profitable company at a market cap less than $100 million. It is in my buy and hold portfolio, and I'm sort of happy that it is not in this portfolio. I don't want a lot of crossover between the two portfolios. There is a bit of crossover, and AVA Risk Group is not in this group portfolio. The next company, NextDC, is a popular company among fund managers. I wouldn't have been surprised if this did make it in the end, but it just fell a tiny bit short. Next company was Linus Corporation. I actually wouldn't have been at all surprised again if this made it into the list. This seems to be a fairly popular company among retail investors. I've also seen this company being mentioned more and more by fund managers as well. And the other company is Mesoblast. This has fallen off the radar a lot of retail investors over the past 6 months, and we've seen the share price take a significant hit as well. There is suggestions the share price is starting to turn around, however. The next near miss is a company I wish made it onto the group portfolio. That's Firefinch. I did a video on this company about 5 months ago when the share price was around 20 cents. I was almost going to take a position in this company, but didn't quite go that far. The share price has more than doubled since that time. This is an exciting company with a bright future. The next company is VentureX. I don't know a lot about this company at all. And one of the good things, good effects or side effects of this project is quite a few companies I don't know anything about have been raised, and it's going to prompt me to do a little bit more research on companies I don't know anything about. The next company, however, I do know a little bit about K2Fly. I do think this has an exciting future, and I can definitely understand why this company was chosen by those who put it as one of their 3 best companies for the future. The next company is something I don't know anything about, Emeria. I don't know what they do. Are they a biotech? Are they a mining company? I don't know anything about this company. So this is one company I'm definitely have to do a little bit of research. It was recommended by 2 investors. And the last company, Kelly Partners, KPG, a group of chartered accountants. I sort of hope this made it onto the group portfolio. However, I don't really like this sort of business model where you get a group of these professionals together. We've seen this happen with lawyers. It doesn't really work as a listed entity. Although in saying all that, the share price for Kelly Partners has grown quite considerably since the COVID-19 financial panic, and they're still relatively low valued. I think something like over $100 million. So those are the near misses. Now let's get into the companies that did actually make it into the portfolio. Before I get into the first of a group of companies that have been put into the group portfolio, just an explanation of why I've increased the amount of companies from 25 to 27. There were 19 companies that had 6 points or more, so they were automatically included into the group portfolio. And for the last 6 companies, I had to choose between 8 companies, and all these 8 companies had 5 points. And I was finding it hard to figure out ways to exclude 2 of those companies from these 8. Then I just thought about it. Out of those 6 companies I had to choose, because I was going to put $4,000 in each company, which totaled $24,000. I just thought about it for 1 second and went, well, 8 goes into 24 3 times. So instead of putting $4,000 into 6 companies and then excluding 2, I could easily put $3,000 into all 8 companies and not exclude any company. And that is what I've done. So let's get into the list. And the first company into the group portfolio is Aries Resources. This is a company I own in my momentum and sentiment portfolio. Company's share price has increased from when I bought it around 5 cents, is now around 20 cents or so, has been growing. They have a partnership with Helix Resources. So this is a gold and copper miner. They're actually in production. The second company is Zip. This is not a surprise. I actually expected Zip to make it into this list. I was a little bit surprised about the lack of support of other buy now, pay later companies like Afterpay, Sezzle, Splitit, all those sort of companies. Zip was the only one. Actually, no, I think Afterpay had 1 vote. No other buy now, pay later had any votes. So Zip's made it, not a surprise there. And another company that was a bit of a surprise is BlueScope Steel. I did not expect this company to make it. I probably would not choose this as a long-term buy and hold. This company is a cyclical company. Steel prices have been going through the roof in the recent year or so, and then more than likely, I do think steel prices will come back quite a bit, and I think BlueScope Steel's share price will follow that. However, you have made your choice, and BlueScope has made it into the group portfolio. The next company in the group portfolio is a company I actually do have in my short-term sentiment and momentum, and that is Dusk, a recent IPO. This is, well, if you call a recent IPO as a company that listed in something like October of 2020, so it's nearly been on the ASX for about a year. I did buy into Dusk in December last year when they had a profit upgrade. Very impressive growth for this retail company. They're into candles and all that sort of crap that I'm not really interested. But just because I'm not interested doesn't mean other people are not, and they do have impressive growth. So there is some interest around that. Next company is a little bit of a surprise, Woolworths. Now, in saying that, I would probably say this is a very safe company to have in your portfolio. Maybe that's the reason why some people would choose this company. Woolworths, there's not going to be any sort of fantastic growth over the next 5 years. I'd say between about 2 to 3% capital growth, maybe some, definitely some dividends. I probably would prefer Woolworths to be a little bit cheaper than it is now to put into any sort of portfolio I have. And that's sort of true for the next company as well, Fortescue. There are some problems, I think, in the next 5 years in iron ore and Fortescue. They do have to diversify to maintain the share price where it is now. And in 5 years, I have no doubt China will be much less reliant on our iron ore. They do have fairly big iron ore projects in Africa, and when they go into production, they're going to become less reliant on our iron ore, and that actually is a problem or potential problem for us. I do expect iron ore prices to be considerably lower than they are now in what can't say in 5 years, but in the next few years, I do expect iron ore prices to be well down. Impressive dividend yield for this company. In saying that, you should not rely on mining companies for dividends simply because they are cyclical. So a little bit surprised Fortescue made it into this group portfolio. In saying that, impressive dividend yield, and maybe that's the reason why a few investors chose this company. The last two companies that made it into the group portfolio with 5 points, totally different companies. The first one is ResMed. I think this is a great choice. This is a company that is growing, an international company, and they'll have new products into market in the next few years. I do think this has the potential to be a bigger company in 5 years' time. I've always wanted to hold ResMed, and I've always thought maybe if I've been a little bit more patient, I'll be able to see the share price fall back a little bit. And every time it falls back, I'm just thinking maybe it could fall back a little bit more, then I'll take a position. This is the sort of company you just buy in at a certain point in time and then just hold it for the long term. It's one of my biggest flaws over the past 10 years or so is the lack of patience sometimes. I've held these companies for a short period of time and sold when the share price has risen. This is the sort of company you just buy and hold for as long as possible. The next company is a company I know nothing about, and that is Province Resources, ticker code PRL. I had a very quick look when this company was raised. Someone nominated this company. They're into green energy, hydrogen, that sort of thing. So this is definitely a company I'm going to have to do a little bit more research. So that is the first 8 companies onto the list. Each of these companies have $3,000 each in the portfolio. Let's get to the last 19 companies, and all these companies have $4,000 assigned to them. The next 4 companies made it into the group portfolio with 6 points, and the first 2 companies are quite different from each other. Arctis, this is in cybersecurity. This is a company I am following at the moment. Share price is in a downtrend, and the lower the share price falls, the more excited I get about this company. When they release the next Appendix 4C in about a month's time, or less than a month's time, very close look at that. If this company can become operational cash flow positive, I do think that could be an inflection point for Arctis. I'm not surprised this company made it. The next company, I am sort of a little bit surprised that BHP did make it. Yes, BHP, Australia's biggest mining company. In fact, not only Australia's biggest mining company, one of the biggest companies on the ASX did make it. Share price right now is about $48, almost historic highs. I would prefer to buy this company, BHP, at lower prices. A lot of tailwinds behind BHP right now. I think a lot of those tailwinds will turn into headwinds eventually. But if you just hold this for a company for as long as possible, eventually with dividends, that sort of thing, I think you'll come out fairly well in the end, maybe not beating the market sort of well. So that's one thing that would hold me back from buying BHP is I think you might get average returns, not beating the market returns. The next 2 companies I know very little about, and when I say very little about, I mean very little. First one is Imogen Biosystems. I could not even tell you what this company does. So again, another company where I'm going to have to do a lot of research. Seems like it's a popular company on the ASX. And the second company is a company I have been requested to do a video on, and I did have a very quick look at it. And it does actually look interesting. That's Credit Intelligence. This is a profitable company, yet it's fairly cheap, based in Hong Kong, if I remember correctly. and they deal with bankruptcies and that sort of thing. I'm not exactly sure exactly what they do, but it does seem fairly cheap for a profitable, maybe growing company. So I'm going to have a closer look at both these companies to see exactly what they do and whether they have some good growth potential. No doubt there are some investors out there who believe that because they were selected by more than one investor. The next 5 companies all made it into the group portfolio with 8 points. The first company is, I'm extremely happy this company made it. I did not think this company would be popular. However, it is, and that is Washington H. Soul Pattinson. This is the sort of company that would not be out of place as a core holding in any of your portfolio. I've held this company in the past, and I'm not sure why I sold out of this company. This is a company you just buy and hold for as long as possible. Dividends have been growing through time. There's probably some sort of record this company has for growth in dividends. My only concern with this company, if I had to say one bad thing, is they do have a significant holding in a coal company, and I don't think coal companies have a future. Well, long-term future anyway. Second company is Alcidion. Not surprised this made it. This company is a favorite among a lot of retail investors and even now among fund managers, seeing this company raise more and more. The most recent Appendix 4C, they were highly operational cash flow positive. Looks like they may have turned the corner. The market, however, was seeing that before it happened because the market cap has gone to something like $400 million right now. The next company that made it into the group portfolio is Talga. If you had to ask me exactly what this company does, I probably would make some errors or some mistakes. I instantly am thinking this is something to do with lithium, so I'm going to have to do a little bit more research. So the very fact that this company has been included into the group portfolio is giving me the impetus to do more research. They did release an announcement to the market before the opening, and I'll talk about that announcement later in this video. Not a surprise Talga made it because it is a popular company among retail investors, and we have seen the share price rise over the last 2 years quite impressively. The next company that made it is not a surprise again that made it into this list. That's EML Payments. They have had some issues with the Central Bank of Ireland accusing an acquisition they made recently about money laundering or something. We did see the share price take a significant hit, so better value with EML Payments. You could argue there are still some issues around that, and we could see the share price fall even further. I think over the next 5 years, there is potential that email payments will have a significantly higher market cap than it has right now. The final company that made it into the growth portfolio with 8 points is maybe a surprise to some people, but it isn't really a surprise to me, and that is A2 Milk. This is a company I have held in my long-term portfolio for about 5 years, one of my longest holdings. I've seen the share price rise from $2 to a high of $20 and then fall all the way back to $5. There is signs of a bit of a turnaround or possible turnaround in the share price in recent times. The company has given us 4 downgrades in about 8 or 9 months and a new CEO. They are 2 good signs. You don't usually see more than 3 downgrades in a row. And typically when you see a new CEO after some problems a company has experienced, that new CEO tends to try to turn things around, and that can be the sign of a bottom. The other thing we've seen in recent times is value investors are getting interested in this company. They're seeing some good value. I would prefer to see a confirmation of the shift in sentiment. I would prefer that shift in sentiment to coincide with some good financial news from the company. So not a surprise this has made it just because the value is there right now with A2 Milk. The next 2 companies that made it into the group portfolio, both with 9 points. One of these companies is a surprise, a little bit of a surprise. The other company is not at all. The company that is not a surprise is Novonix. This is quite a popular company among retail investors. They're into lithium, and lithium right now is all the rage. I would probably say that just because it's all the rage now doesn't mean lithium will remain popular over the next 5 years. Typically what you see with mining companies, if one commodity is all the rage, like lithium, you get more companies trying to mine it, and then you get an oversupply of that commodity, and then the price of that commodity just falls off a cliff. That could happen with lithium, I just don't know. However, in saying that, we might see the demand in lithium just skyrocket to meet up with that increasing supply. That could happen as well. The second company that I was a little bit surprised made it was Unity, UWL, UWL, I think it is. This company has been a significant, sensational growth company over the past few years. Over, I think it's like $2 or $3 billion market cap. A lot of acquisitions, so a very acquisition-hungry company, profitable, good cash flow, that sort of thing. So a little bit surprised I made it onto this list because I do think at times this company is overlooked by the overall market. The next two companies that made it into the group portfolio, each with 10 points. The first company, Tesseract, is not a surprise at all. This is a popular company among retail investors, and rightly so. Very acquisition hungry. They've done a fair few acquisitions over the past 2 years, and with those acquisitions, they've seen their revenue and their potential revenue just go through the roof. They released a positive announcement to the market a few days ago, maybe a week ago. Share price rose 20% on that announcement, and I took a position and put Tesseract into my short-term momentum and sentiment portfolio to ride this change or shift in sentiment, because the share price had been under pressure over the last 4 or 5 months, and this could be the turnaround in that share price going down right now. I do expect this company to be highly profitable and highly operational cash flow positive in the next few years, and it wouldn't surprise me to see Tesseract a $1 billion market cap company in 5 years' time. Doesn't mean it will get there, but it wouldn't surprise to see it at that point. The second company has a market cap of $20 billion. And when I first started researching Xero in 2013, they were at that point in time highly popular among retail investors as well. I took a position in Xero at $15, and then I thought I was being very smart by taking profits at $30. And it's another example of how patience can be very rewarding to your long-term success as an investor. If I just held on to Xero, this would almost be a 10-bagger for me right now. Very exciting company for the future. But again, market cap of $20 billion. So there is a lot of that's already been priced into Xero's market cap. They have that potential, though, to grow considerably more over that next 5 years. So not a surprise, this company has made it. This is another popular company in the retail investor world. So far, we've seen a fairly diverse list of companies, and that continues with the next two companies. Both of these received 12 points, and that first company is Kogan. Not a surprise. I do think, in my opinion, this company could be anything in 5 years. It could be significantly more value than it is now. I think there is that potential simply because we are transitioning to an e-commerce world, and Kogan can be the beneficiary of that. Some might suggest that Amazon could destroy Kogan. In saying that, people were fearful that about 4 years ago that Amazon would destroy companies like JB Hi-Fi, and they were completely wrong about that. Kogan can be sort of a supplement or complement to Amazon. I actually use Amazon more than Kogan, but I do use both. The second company with 12 points is Lake Resources. I don't know a lot about this company. They do lithium, or they have, I think it's 4 lithium projects in the lithium triangle, which is in Chile, or that Southern American area. I have been asked to do a little bit of a video on Lake Resources, so I did start a little bit of research in the company. However, I could not tell you right now exactly what their projects entail and why there is a potential future for this company. And even though I don't know anything about Lake Resources, doesn't mean other people don't. And just because this company has been voted in to the group portfolio just means I'm going to have to do more research on Lake Resources. And more than likely, I will eventually do a video on this company because there definitely is some excitement out there among investors. Now on to the final 4 companies into the group portfolio, and the first of these 4 companies is not a surprise it made it, and that is Pointerra. Ever since Bevan Slattery took a position in this company about a year ago, also, I'm not sure exactly when. Just seeing share price explode. Market cap currently between about $300 to $400 million. Low revenue, almost operational cash flow positive. If they can keep up their revenue growth trajectory, this company will be highly profitable in 3 or 4 years, simply because their margins are quite high. And then in 5 years, who knows where this company can be. A definite high risk, high reward sort of holding, not the company you could put all your wealth into simply because of that high risk. Now, talking about high risk, high reward, the next company doesn't really fall into that category, and that is CSL. This is the sort of company that should be a staple of any portfolio. It is in my long-term growth and long-term buy and hold portfolio. I've made the mistake in the past of buying and selling CSL. About 6 or 7 years ago, I bought CSL at $50. Then I sold it at $90 because I thought the valuation was a little bit too rich, and then the share price kept on rising. You would see the same sort of argument raised today by a few people who are bearish on CSL, that the valuation is a little bit too high. And then more than likely, we'll just see the share price keep on rising over the next 5 years. So this is not a surprise that this has made it into the group portfolio, because this should be a staple in any sort of long-term portfolio. The final 2 companies that have been put into the group portfolio should not be surprised, because I've sort of hinted at these 2 companies in the previous video, and they are BrainChip and Megaport. BrainChip is the very definition of high risk, high reward sort of company. Who knows where it's going to be in 5 years. They're right now at a very important inflection point. They're going into production, and this could be one of the most exciting points of the BrainChip journey. And I just want to hold this company over the next 5 years just to see where they end up. BrainChip would not look out of place on the NASDAQ, particularly if they go through a significant growth profile that I think they will. I think there is that potential they could even list on the NASDAQ eventually. Megaport is a company I don't own. BrainChip is. I do have BrainChip holdings in my long-term portfolio. Megaport is the sort of company I wish I did. It's been a very popular company among fundies over the last 4 or 5 years. Valuation, I think they have a market cap of between about $2 and $3 billion. All the money they make, or the revenue they make, they put into the infrastructure, and eventually, at some point in the future, all that money they've been spending for growth initiatives will come home, and you're going to see their revenue, their profit and the operational cash flow explode at some point in the future. We've seen the share price go up 50% or something like that over the past few months, so there is a bit of excitement right now in Megaport. Here is the group portfolio. I took this little image 1 hour and 10 minutes after open on the 1st of July, and we're already seeing the group portfolio up 1.8% or $1,800 at this point in time. At this point in time, also, the market was down 0.25%. So the market in Australia is down and the group portfolio is up 1.8%. Just want to repeat that again, up 1.8%. So after 1 hour and 10 minutes of the new financial year, the group portfolio is outperforming the market by a considerable amount. Whether it can maintain our performance over the next few years remains to be seen, so we shouldn't get too excited about this performance after only 1 hour and 10 minutes. 2 companies in the group portfolio did release price-sensitive announcements before opening or near opening of the market. Talga released Node Project DFS. I'm going to have to go through this in finer detail. It does look exciting on the first impressions. Talking about mining plan for 2023, commercial node production 2024. Some very impressive numbers in regards to revenue, EBITDA, present value, all those sort of things. So I have to go through this announcement, go through this company, all their presentations to have a look if there is some value right now in this company. Zip was the other company that released a bit of price-sensitive news to the market, although this announcement seems to have affected Propel Holdings by a considerable amount. Their share price is up 67% because of this. So this was mainly to do with that company, Propel, because they've gone into partnership with Zip to strengthen the payments offering. Again, this is another announcement I'm going to have to go through a little bit more. Probably hasn't really affected Zip share price. This is more to do with Propel Holdings. And that's a company I know nothing about. So I'm going to do a little bit of research on Propel Holdings as well. And that is all I have for this video where I've revealed the holdings in the group portfolio. If you have any questions about any of these holdings, any of their companies, if you want to give me some clarification about some of those companies I know very little about, I would enjoy it immensely. So leave a comment in the comment section talking about those companies I know very little about. If you have any other questions I can answer, make sure you leave it in the comment section. I'll answer anything you have to say ASAP. I hope you've enjoyed the revelation of this group portfolio. Hope you do like it. It's already outperforming the market after only 1 hour and 10 minutes. The last thing I should say is I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. Bye.